Hello everyone. Welcome to the Stock Minds web channel. HIMS and HERS Health, NYSE HIMS, has emerged as a standout performer in the telehealth sector, delivering exceptional growth and solidifying its position as a leader in digital healthcare. The company's Q1 2025 earnings report showcased significant revenue and earnings growth, reflecting its successful telehealth business expansion. In this video, we will dive into HIMS and HERS' recent earnings, stock performance, growth potential, and the risks investors should consider. About HIMS and HERS. Founded in 2017, HIMS and HERS Health is a San Francisco-based telehealth company that offers a range of health and wellness services through its digital platform. The company provides prescription medications, over-the-counter products, and personal care items, focusing on areas such as sexual health, mental health, dermatology, and weight management. By leveraging a direct-to-consumer model, HIMS and HERS connects patients with licensed healthcare professionals, enabling accessible and affordable care. HIMS and HERS financial performance. HIMS and HERS delivered outstanding financial results in Q1 2025, showcasing its strong momentum and continued growth trajectory. The company reported revenue of $586 million, marking a substantial 110.66% increase compared to $278.17 million in Q1 2024. Earnings per share (EPS) also surged to 20 cents, a 313.6% rise from 5 cents in the same quarter last year. On a trailing 12-month TTM basis, revenue reached $1.78 billion, up 85.99% from $959.4 million a year earlier, while TTM EPS climbed sharply to 68 cents from a negative 1 cent, reflecting significant profitability improvements. Free cash flow per share, TTM, also increased impressively to $1.03, representing a 243.3% growth from 30 cents. The company maintained a strong gross profit margin of 77.04% and a healthy net profit margin of 9.21%. Operational efficiency and effective capital management were evident in its return on assets, ROA, of 10.76% and return on equity, ROE, of 36.79%, alongside a conservative debt-to-equity ratio of just 0.12. Over the past 5 years, HIMS has grown its revenue at a 79.4% CAGR, and both net income and free cash flow turned positive and began growing in 2024. This is truly a company capable of growing its business very rapidly. HIMS and HERS 2025 financial forecast. Looking ahead, analysts forecast 2025 revenue to reach $2.34 billion, a 58.6% increase from 2024's $1.47 billion, with EPS projected at 67 cents, up 26.24% from 53 cents. Although the current analyst consensus rates the stock as a hold with a price target of $37.67, implying a potential downside of 23.85%. But I think analysts are too conservative, as HIMS has the potential to revolutionize the healthcare industry and still has a reasonable valuation. HIMS stock price performance and valuation. At the time this video is created, HIMS' current share price standing at $49.47, representing a remarkable 324.6% increase over the last 12 months, far outpacing the S&P 500's 8.1% gain during the same period. Over the past 5 years, the stock has delivered a total return of 395.2%, significantly outperforming the S&P 500's 91% increase. From a valuation standpoint, the company trades at a trailing 12-month TTM price-to-sales ratio of 6.05 and a forward price-to-sales ratio of 4.73. Its TTM price-to-earnings (PE) ratio stands at 72.56 with a forward PE of 73.94, while its price-to-free cash flow (BFCF) ratio is 44.66. If we look at HIMS' valuation compared to the sector median, it appears to be significantly higher. Although these valuation multiples appear elevated at first glance, they could be justified by HIMS and HERS' exceptional financial performance, rapid revenue and earnings growth, and scalable technology-driven business model. These factors suggest that the market's premium valuation reflects confidence in the company's continued trajectory and long-term potential. HIMS and HERS growth potential. HIMS and HERS is positioned to grow due to several factors. 1. Growth of subscriber and ARPU. HIMS and HERS Health has achieved strong subscriber growth by shifting its focus to personalized, multi-action daily care solutions that address multiple health conditions simultaneously. This approach has deepened customer engagement and improved retention, resulting in a 38% year-over-year increase in subscribers to 2.4 million. The company has also expanded into new specialty care verticals like weight management, menopause, and low testosterone, broadening its market and encouraging multi-condition subscriptions. Combined with an AI-driven personalization platform and more efficient marketing, these factors have driven a 53% increase in average revenue per user, ARPU, reaching $84 in Q1 2025. This shows that HIMS and HERS is able to grow its subscriber base while also increasing monetization efficiency. 2. Expansion into specialty care verticals. HIMS and HERS is expanding into new specialty areas such as weight loss, metabolic health, menopause, low testosterone, and longevity care. In Q1 2025, it launched branded Wegovy semaglutide in partnership with Novo Nordisk, expecting its weight loss business to generate $725 million this year. The company plans to introduce menopause and low testosterone treatments in Q3 2025, targeting a $30 billion market by leveraging its hormone therapy infrastructure. It is also developing a $500 million at-home lab testing business by 2026 to support growth in longevity, sleep, and preventative health, all driven by a platform focused on personalization, convenience, and key partnerships. 3. Expanding guidance. HIMS and HERS Health reaffirmed its strong 2025 outlook, maintaining revenue guidance of $2.3 billion to $2.4 billion, representing 70 to 77% year-over-year growth, and raising its adjusted EBITDA forecast to $295 million to $335 million. This confidence is backed by a strong Q1 2025, with net income rising to $49.5 million, adjusted EBITDA nearly tripling to $91.1 million, and operating cash flow reaching $109.1 million. Looking ahead to 2030, the company aims for at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA, targeting 20% compound annual growth. To reach these goals, it plans to enhance personalization, expand into new specialties and markets, improve the subscriber experience, and grow through strategic partnerships. Risks to consider. While HIMS and HERS presents a compelling investment opportunity, potential risks include: 1. Declining gross margins. Despite record revenue, the company's gross margin fell to 73% in Q1 2025, down from 82% in the same period last year. This 9 percentage point contraction highlights rising cost pressures, particularly from the scaling of GLP-1-based weight loss medications, which carry higher production and distribution costs compared to traditional offerings. The partnership with Novo Nordisk to distribute Wegovy, while strategically advantageous, has introduced margin volatility as the company balances volume growth with profitability. Additionally, macroeconomic factors such as tariffs on imported pharmaceutical ingredients could further strain margins, particularly if global trade tensions escalate. 2. Competitive landscape. The digital health sector is increasingly crowded, with rivals such as RO and Lemonade Health vying for market share. HIMS and HERS focus on premium daily products and sexual health. A historically stable segment exposes it to substitution risks if competitors undercut pricing or offer more convenient solutions. Additionally, the company's expansion into menopause and low testosterone support pits it against established pharmaceutical companies and specialty clinics, where brand loyalty and clinical expertise are stronger. 3. Regulatory and compliance hurdles. As the company expands into new therapeutic areas and geographies, it faces an evolving regulatory landscape. For instance, telehealth regulations vary significantly by state and country, particularly for controlled substances like testosterone replacement therapy. Stricter oversight of direct-to-consumer pharmaceutical marketing or changes in reimbursement policies could force costly operational adjustments. Despite these risks, HIMS and HER's proactive strategies and strong financial performance mitigate potential downsides. Conclusion: HIMS and HER's Health has demonstrated exceptional growth and resilience, outperforming market expectations and establishing itself as a leader in digital healthcare. With a robust financial foundation, strategic expansion plans, and a focus on innovation, the company is well equipped to navigate the dynamic healthcare landscape. While mindful of potential risks, the compelling growth prospects and solid performance make HIMS a stock worth considering for investors seeking exposure to the burgeoning telehealth sector. What do you think about HIMS and HERS? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.